Hey crypto fam, are you strategically selling crypto at a loss to lower your tax bill? Well, big changes are coming starting in 2026. The wash sale rule is expanding to include digital assets like Bitcoin and Ethereum. In this video, you'll learn what the wash sale rule is, why crypto was previously exempt, and how the PARITY Act is changing the game. Plus, we'll cover the new stablecoin exemption and staking reward deferral. Let's dive in. Okay, so here's the deal with the wash sale rule. Basically, it stops you from claiming a tax deduction if you sell an asset at a loss and then buy a substantially identical asset within 30 days before or after the sale. That's a 61-day window where this rule applies. If you do, the IRS disallows the loss. Now, the disallowed loss isn't gone forever. It gets added to the cost basis of your new purchase. So let's say you buy one Bitcoin for $50,000, sell it for $40,000, a $10,000 loss, and then repurchase it within 30 days for $42,000. That $10,000 loss is disallowed and your new cost basis becomes $52,000, the $42,000 purchase price plus the $10,000 disallowed loss. So why was crypto exempt from this rule in the first place? Well, the IRS classifies crypto as property, not stock or securities. And the wash sale rule, section 1091, specifically mentioned stock or securities. So crypto was outside the scope. This created a huge tax planning opportunity. Crypto investors could sell at a loss and immediately buy back the same crypto. They could lock in that tax deduction while keeping their position in the market. Some people called it tax loss harvesting on steroids. Honestly, it was totally legal. But guess what? According to a 2023 report, this cost the US Treasury an estimated $1.6 billion annually. That's a lot of money and the big reason why they're closing this loophole. Okay, so the Providing Accountability and Regulatory Improvements for the Treatment of Digital Assets, Youth and Other Matters Act, or PARITY Act, is bringing some major changes. The biggest one, it extends Section 1091 to cover digital assets. That's right. Starting in 2026, the same 30-day wash sale window that applies to stocks will apply to crypto, Bitcoin, Ethereum, all of it. Sell at a loss, repurchase within 30 days, and bam, disallowed loss. Sound familiar? This is a big deal for active crypto traders, so pay attention. Now, here's a little relief. The PARITY Act includes a stablecoin exemption. If you have stablecoin transactions under $200 in gain, they're exempt from capital gains reporting. This is great because it addresses the issue of triggering taxable events when using stablecoins like USDC or USDT for small purchases. Those tiny price fluctuations can add up, but now those gains under $200 are off the hook. And guess what? There's also a potential break for staking rewards. Under current rules, staking rewards are taxed as ordinary income when you receive them. But the PARITY Act proposes letting you defer that income for up to 5 years, or until you sell the staked assets, whichever comes first. This makes sense, right? It aligns the tax treatment with the fact that you often can't immediately access those rewards. Now, here's a tricky one. What does substantially identical even mean for crypto? For stocks, it's pretty clear: shares of the same company, options on the same stock, highly correlated funds. But for crypto, the PARITY Act defines it as the same digital asset. So Bitcoin is Bitcoin. But what about different versions of the same crypto on different blockchains or wrapped tokens? This is still being debated, but it's something to keep an eye on. Navigating all these crypto tax rules can be a headache, right? Especially with the wash sale rule coming into play. Tools like dTax can automatically track your crypto transactions and identify potential wash sales. dTax supports 23 exchanges and has a pre-audit sandbox to test different scenarios. Plus, it's free for up to 50 transactions. Check out getdtax.com. It's open source and free to start. So, the big takeaway here is the crypto tax landscape is changing. The wash sale rule is coming. So plan accordingly. Make sure to subscribe for more crypto tax tips and updates. Thanks for watching, and I'll see you in the next one.